Hi there. Thanks for tuning in. Today, we're going to be doing an analysis and valuation of Coca-Cola Europacific Partners. So, without further ado, let's take a look. Now, first and foremost, what this company is actually a bottler. So, they actually do the bottling and some of the distribution for the Coca-Cola company. So, that's how they're different than the actual Coca-Cola company, ticker symbol KO. This one is the Europacific Partners ticker symbol CCEP. Okay, so we're looking here at the full year 2023 results. Essentially, their top line revenue grew by pretty much 8%. That's huge. That's especially huge for such a recognized brand like Coca-Cola. That's how you know it's a very different company. And in store and online, it seems to be growing. They have a growing dividend. It's in euros here, but I'm going to be doing this analysis in dollars roughly. Their operating profit has also been going up by even more than revenue, so that's actually wonderful. And their free cash flow is in the billions, which is really nice. Now, the revenue, as we can see, has been growing. Essentially, the 2023 versus 2022, the volume went down, but the revenue went up. Okay? Now, the interesting thing here is that basically, even though the Europe region is growing, the Asia Pacific is struggling a little more. And usually you see this be flipped. This is essentially because they're redoing a lot of the SKUs in Indonesia, especially. So they're being more strategic here. They're saying, okay, maybe we'll sell less SKUs around the Asia Pacific region and actually concentrate on a few really good products. So that's more or less what they're doing, and that's why you see actually the Asia Pacific performing less well than Europe, whereas in many other regions, for many other companies, it would be exactly the opposite case. Now, their revenues by geography, you can see them here, where Great Britain is a big chunk, and Germany, and Iberia, and France, and Australia. Those are pretty much the largest cohorts of revenue in Benelux, while New Zealand, Pacific Islands, Indonesia, Papua New Guinea, and some Northern European countries are a pretty small, but yet growing. So the reason why you see this big drop here in Indonesia and Papua New Guinea, as we were saying, is because they are actually redoing the SKUs and consolidating a little bit there. That's why it's important, okay? So let's take another look. Now, here's their cost of sales, and I love this little graph. The cost of sales out of every bottle is manufacturing, taxes, commodities, so the prices of the things that make glass or that make plastic, and then concentrate and finished goods, okay? Core brands. Their core brands are all growing. So Coca-Cola is growing, Monster Energy is growing, Powerade is growing, Infused Tea has had incredible monster growth, and Jack Daniels over there is also doing things. So, very good growth overall for most of their things. Now, their portfolio, they want to be more choiceful on where they want to play. So, their Indonesia SKUs, again, they did a 60% SKU reduction. So, they're focusing on sparkling products and tea. They exited bulk water products across Australia, Germany, and Spain. And, for example, they're ending their Capri Sun partnership in Europe. So, they're saying here, okay, we are cutting the departments that don't make us the most money, and we are going to focus in what we know how to do, and we're going to focus in the regions that are most profitable. So there you go. They're being more choiceful, and you know what? It takes a little bit of bravery and long-term vision to say, okay, this doesn't work, but this does. Let's focus on what we know how to do, and that will actually have more room for growth instead of overextending ourselves, which a company such as Coca-Cola Europacific Partners can overextend themselves with different products. Now, their leverage is decently high. Their debt to EBITDA, however, it has been decreasing, right? Since they acquired the Asia Pacific business, it has finally been decreasing, and it's going to decrease to a 2.5 to 3 times level. This is borderline acceptable, basically. I prefer to see it a little lower, but as long as that keeps going, then and keeps decreasing, that I would be fine with it. So their midterm target leverage is about 2.5 to 3 times. Right now, they're about a 3 times. Hopefully, they keep decreasing it because that's better for us, the investor. Now, Here's their midterm objectives. So this is something that if you're forecasting the future, you may want to just take a look at this, right? To realize that will be their net debt to EBITDA, to realize that their CapEx will keep being 4 to 5% of revenue. Revenue growth is about 4%, and that should be about it. And that's their comparable free cash flow, which is a little different than the free cash flow I'll be using in calculations. Here's also a pretty quick look from QuickFS, where their revenue growth has always been so monstrous here. Double digits revenue growth in many years, many years in a row too. Their gross margin is pretty consistent. Their operating margin is also really consistent and improving. So, and then their return on assets, return on equity, return on invested capital, at least these last couple of years since 2020 basically has been improving significantly, and it's comparable to 2019 levels. So I want to do a revenue estimate here. I want to say, okay, I want to project free cash flow to do a discounted free cash flow model. What I'm going to do is I'm going to go to Yahoo Finance to the analysis tab. There I see analyst predictions, analyst estimates. So you see, I'm going to grab the low estimates here, and these are just going to be conservative. I'm also going to take the average of revenue, free cash flow to equity to revenue, essentially what percentage of revenue gets turned to free cash flow. The average here is about 12%, so I'm going to roll with that number. And so 12% of these two numbers over here for 2024 and 2025 are going to be what I have for free cash flow, basically. So I'm going to do that, and then I'm going to grow at 3%, and then I'm going to give it a perpetual growth rate of 3%. So what I'm saying is this company is going to grow at 3% in perpetuity from 2026 outwards, and then I'm going to put that with a required rate of return of 11%, divide that total value by the number of shares out, and I get a fair value of equity of $70.45. However, if we subtract the net debt, we were talking about how they had a ton of net debt, which is about $10 billion. Then the fair value would be $47.62. Let's look at where they're at. So in terms of US dollars, they're right now at around 66 US dollars. If you see their 5-year trajectory, they have hovered around that $50 to $60 range pretty consistently, with the exception of 2020. They were clearly a buy around here, and maybe even around here in late 2022. However, right now they've gone up quite a lot, and it makes sense. They're a very, very good performer. And look at that. They have a dividend yield of over 4%. They've been growing a lot. Coca-Cola Europacific Partners seems to me like way better of a company than Coca-Cola itself, honestly. So yeah, if you've held it the past 5 years, maybe in terms of absolute growth, you weren't super happy. But hey, if you knew when to buy it, if you knew to buy it during the pandemic lows, or maybe during this little trough in late 2022, you're probably way happier, actually. So let's talk a little bit about the all in all. So Coca-Cola Europacific Partners looks to me like a wonderful company, with its main issue actually being their valuation. The Indonesia acquisition and basically the Asia Pacific entrance, and then the optimization of SKUs gives it even more room for stellar growth, and margin improvement bodes really well for future results. Again, especially with the fact that they're consolidating products into what they know how to produce with higher margins, with better marketing, etc. If the debt load is tolerable to you, it may be worth scooping up on a price drop, essentially, because without the debt, it's worth a little more than the current price right now. But with the debt, and if the debt load is not that tolerable to you, well, then it's not really as interesting. However, the share dilution is present. So they're actually diluting shares, and that makes sense. They use that to raise money to essentially pay off the debt and to pay off a couple other things. And current liabilities are higher than current assets, even though total assets are way higher than total liabilities. So more dilution can be expected. I don't see it ending at any time. The question is just, can it grow quicker than it can dilute me? And then the Ozempic factor is also a future risk. And I think this is the big thing that could change the story of Coca-Cola Europacific Partners, because it can reduce both the top and the bottom line if Ozempic and similar drugs are successful. So my question here is, what will happen in a decade? What's your story for Coca-Cola Europacific Partners in a decade? Will it grow even further in the Asia Pacific region? And will that capture a significant share of the market there that has been untapped so far? And then will that keep many years of double-digit revenue growth? Because if so, that is amazing. However, if Ozempic and other similar drugs are super successful and get to the developing world very quickly, then maybe all those sugary drinks or all those alternative drinks won't be as interesting anymore for people. What will happen in a decade here? I feel like this company is pretty great, but you do have an it factor there, and you have to see the theory prove itself. You also have to see if dilution will ever stop. Will it stop in a decade? Will the revenue growth slow down, but dilution keep up? That could be an issue. Depending on what you believe and the story that you build with Coca-Cola Europacific Partners, this may or may not be an investment for you. Now, I thank you very much for watching this. If you like this, don't forget to like and subscribe. There will be plenty more of this coming. If there's any stock you want me to analyze, feel free to comment down below. Once again, thank you so much and have a great rest of your day.